Hey, welcome back to YT Finance, and today we are talking about Palantir Technology stock news pertaining to their PLTR stock price, their earnings report on November 9th, and if you are a holder of Palantir stock, you need to know if you paid too much or overpaid for your Palantir shares. Then we will discuss the top 3 best penny stocks to buy in November that could absolutely soar. While these penny stocks are speculative, they will give some diversification to a portfolio because one of them is a growth stock, one is a dividend stock, and the other is a commodity stock. Go and press the like button right now if you want more PLTR stock news updates. Comment down below your average cost for your Palantir shares, turn on all the subscription notifications to stay informed, and now let's get right into today's stories. As you know, Palantir specializes in big data management, analytics, artificial intelligence, and data mining so they can use their technology to build platforms that benefit both government and commercial clients. However, this article is pretty controversial because of its extremely conservative and even bearish view on Palantir, but I am here to set the record straight. If you are a Palantir shareholder, you know that 2021 has been a very volatile year for the PLTR stock, and even though it started out this year in January with a 70% surge, it has since lost its momentum, especially in April. However, the stock is still doing better than Alteryx, ticker symbol AYX, but not as good as Snowflake, ticker symbol SNOW, especially in terms of stock price appreciation due to the PLTR stock trading sideways for some time, which has frustrated investors who want to see instant results. Some analysts blame this PLTR stock price consolidation on flat revenue growth, which to me is absolutely ridiculous, or bears blame it on how Palantir is overexposed to government contracts while their commercial platforms are not performing as well in comparison to their government segment. But this is a terrible argument by bears because as long as both segments are scaling upwards and bringing in more revenue each year, it hardly matters which one is their main moneymaker as long as they both continue to scale. We have hard data that backs this rebuttal because Palantir has had impressive top-of-the-line growth of 49.1%, which considers both their government segment and commercial segment combined. Also, their commercial segment has yet to truly mature, while their government segment has been their bread and butter for years, so even if their government contracts slow down, their commercial segment still has a much longer growth runway to make up for any losses. Now, a problem that this article is correct about is Palantir's Gotham platform for government clients face less competition than their Foundry platform from commercial customers. In terms of commercial competition, Palantir is directly competing against C3.ai, Redshift by Amazon, and the ones we've already talked about, such as Alteryx and Snowflake, just to name a few. Luckily, this has not hindered Palantir's revenue forecasts for 2022, which is almost $2 billion, or for 2023, which is well over $2.5 billion. This year alone, Palantir is set to bring in around $1.5 billion, but I think that they will personally beat that expectation because I think Palantir will exceed their estimated revenue projection on their approaching earnings report, and we will talk more about why that is in a moment. Palantir's revenues will beat their expected results because even the most conservative estimates by analysts puts Palantir making a compounding annual growth rate of around 29.4%, which is extremely close to what Palantir's management expects the company to make, which is a 30% CAGR over the next 4 years. Now, the reason this is good news is because Palantir's management and analysts are reporting numbers that Palantir will easily be able to beat, thereby creating more hype for the stock after their earnings report because Palantir did better than their projections. Other companies that take this approach are Tesla and Fastly. However, the opposite can also be true where companies hype up investors just to disappoint them on earnings report, such as Zillow and Chegg. So low-end estimates can actually be very beneficial, especially in this case. We can also see this happening in Palantir's previous 4 quarterly earnings reports where they have surprised analysts as well as their own management of how well the company is doing, and you can see the data on screen. Now, keep in mind that Palantir does not beat estimates by leaps and bounds, but rather it beats expectations from anywhere between 2 to 7%, which may not sound like a lot, but this represents millions of dollars. So this begs the question, is Palantir overvalued at $26 per share? How does it stack up against its competition in terms of its peers? And what is a good average price to have on the stock heading into earnings? Well, first let's compare Palantir to their high-growth SaaS or SaaS peers. According to their NTM revenue multiple, which is 28.3, it is in line with their industry at around 24. However, the fair value price is still $28, so if your average cost is below $28, then you're good to go. And if your average cost is below $22 per share, you are set for a great long-term hold. However, if your average cost is above $28, you may want to consider making a risk management plan to sell high and average down your cost basis. Because I value transparency, I want to add that the author of this article, which is linked down below in the description along with all the other sources that I use, was overall strict but fair, and they own PLTR shares. And I would also like to make you aware that I myself personally hold Palantir stock, and it makes up less than 3% of my portfolio. Now, I don't own every stock that I report on, so I can be as unbiased as possible, but when I do own a stock that I report on, I try to disclose that information to you. Now let's talk about 3 penny stocks that I think have really good future growth potential depending on the type of investor that you are. Now, these are not stock recommendations, but rather 3 stocks that you could put on a watch list to see if they fit your specific investing strategy. With the scare of hyperinflation, or at least non-transitory inflation, investors are always looking for stocks that could benefit from this turmoil. This will require us to think very broadly in different industries to think about what stocks and companies could benefit from things like inflation, rising interest rates, or could have a huge growth catalyst coming up. We will start off this list by talking about a gold mining company which will benefit from rising inflation rates. Now, we are not investing directly into the commodity of gold, but rather a company that owns 3 different gold mines in 3 different regions. The name of this company is B2 Gold Corp, ticker symbol BTG. This mining stock has climbed over 21% just in the last month, which is very impressive because normally gold and gold stocks do not rise like that. More good news is that on November 2nd, the company released their 3rd quarter earnings report, and the amount of gold that they mined beat expectations by 7%, coming in at 310,261 ounces. Because of this, the company has actually increased their overall 2021 performance metrics because of how successful their mines have been lately. The company is also launching a campaign with a budget of $66 million to pursue further mining endeavors while planting grassroots exploration programs around the world. The current stock price is around $4.30. It has a buy rating from multiple analysts. It has a good dividend of around 3.79, which is their yield, and a market cap of $4.57 billion. And analysts give this a price target from anywhere between $4 and $7. Next, we have Senseonics Holdings, ticker symbol SENS. This is a biotech penny stock that has appreciated by 11% just in the last 5 days. It has appreciated more than 18% in the last month, and it has gained over 900% in the last year. This company creates long-lasting continuous glucose monitoring systems for people with diabetes, which is absolutely a gigantic market that is ever growing, and it's growing very rapidly, especially in the United States. This stock has 2 catalysts coming up. One is their earnings report on November 9th, and the second one, which is the larger catalyst, is an FDA approval of their 180-day CGM system. The current stock price is around $3.85. The market cap is $1.72 billion. Analysts are split on this stock, whether it's a buy or a hold, and the analyst price targets range anywhere from 80 cents all the way up to $6. Lastly, we have a REIT stock, which are known for giving out very high dividend payouts, and this company is named Invesco Mortgage Capital, ticker symbol IVR. This company invests into real estate along with residential and commercial mortgage-backed securities. The current stock price is $3.40. It pays a dividend of 10.7. Its market cap is $1.05 billion. Analysts say that this stock is a sell, and analyst price targets go anywhere from $2.75 all the way up to $3.25 for a 1-year price target prediction. In the past few days, this stock has climbed around 3%, and over the past year, it has climbed around 14%, on top of any dividend payout that this stock will be paying you. So now we have a stock that covers a commodity such as gold, we have a great growth stock with 2 approaching catalysts, and we have a dividend stock. But what do you think? Comment your thoughts down below on Palantir Technologies and these 3 penny stocks. Like this video if you haven't already, turn on all subscription notifications to stay informed, and I will see you in the next YT video.